You want it? We have it. The hottest mortgage and real estate strategy broadcast in the nation. A Smarter Way Home with your host, Danielle Boote and Victor Bals. 50 years combined experience, ranked in the top 1% in the nation for home loan originations 2020. Promise to expand your knowledge, utilizing creative mortgage financing and home buying strategies. Build a bridge for a better quality of life. Get your brain cells firing for a smarter way home. And welcome to another episode of A Smarter Way Home. My name is Victor Bals. I am your host, a loan officer, past 20-something years. And we are here to discuss modern mortgage and home buying solutions for consumers and real estate professionals alike. And I want to bring in my co-hostess with Moses, Mrs. Danielle Boote. How are you this morning?
I'm doing great, Victor. How are you?
I'm doing good. We were just talking pre-show. We got up early. We each had sleep last night. We didn't sleep so well the other nights.
No. So, that's like sleep's a big deal when you're our age, I hate to say.
Well, I go to bed early, but, as we try to grow our branch and grow everything, all those thoughts kind of keep us up. It's funny, the little things that keep us up at night.
Yeah, and I can function on 6 hours of sleep. 4 hours or less, not so good. So, I'm feeling better today. So I was here early. I beat you to the studio.
Yeah. Well, because I was at the office grinding, man. I had stuff to do. So anyway, today's show, we're going to talk about some very important stuff here for our potential home buyers, or even people thinking about
just consumers in general.
Yeah, just consumers in general. And what are we going to talk about today, Danielle?
We are going to talk about a recent federal law change with the credit reporting agencies in regards to how medical collections are handled.
Well, medical collections, we have, there is a lot of clients. I was reading some stats today that about 24% of consumers have some type of medical bills or something they owe. And we see quite a lot of medical collections on credit reports. And many times talking to our consumers when they come in, we say, how come there's this $50 collection? Well, I'm not paying that. It's principal. My insurance company was supposed to pay that copay. So break it down for us, Danielle. What's going on here?
So up until July 1st, a medical provider, doctor, hospital, anything in that category, could turn over an unpaid bill to the credit reporting agencies, which are Equifax, TransUnion, and Experian, when it wasn't paid in a timely manner. And to be honest with you, off the top of my head, I don't know how quickly they could have done that. But it was very unforgiving, particularly when there was an insurance company involved. Now, most of the time when we see unpaid medical bills, they're a small amount. I mean, sometimes you get somebody that had like a huge bill, right? They had surgery, no insurance. But nowadays, most people do have some kind of insurance.
Just for an office visit.
Correct. It's a small amount. It's a $50 copay. It's a $250 copay. It's a very small amount of money. And I would say 90% of consumers don't even know that the bill went to medical collection until we pull their credit for mortgage purposes.
Well, doing some research this morning, I was reading up prior to the show, and it appears that the creditors have to wait a minimum of 6 months before they can report those collections. It was 180 days.
Right, that's the old rule.
The old rule.
Okay, so that helps clarify. So with the new, effective July 1st
of 2022,
the credit reporting agencies now have to wait 1 full year or 365 days before they report any medical debts to the collection agencies. This gives consumers more time to work with the insurance companies and make sure that, for instance, the medical providers have a big part of your insurance company paying any bills. If they don't code the bill correctly, it's not going to get paid correctly. And sometimes they also bill very late. My husband had a medical bill recently that the doctor didn't bill for 2 years.
Wow.
And our insurance had changed. So the old insurance company said, we're not paying this. You didn't bill it in a timely manner. And the doctor came after us for the money, and my husband fought for 9 months and finally got the doctor to admit that they were wrong. And this was a fairly big medical practice that has a history of not billing things well.
Well, and I can see this happening much more because every year we have annual enrollment.
Yes.
And if they switch carriers, I could see this happening quite often.
Right.
And one of the other things that I've read up on this here is now the medical collections, in order to actually, one, you're going to have to wait 360 days to put it on. And if it's under $500, it won't even be reported.
Correct.
On the credit report.
Which I think will take away probably 75% of medical collections in general.
Right.
But, when you look at credit, and a lot of consumers are frustrated over this fact that you could have perfect credit. You could pay your car payment on time, your mortgage payments, all your credit cards, your student loans, whatever you got out there. But the medical community can ruin someone's credit just because of a $50 unpaid medical bill when everything else has always been paid on time.
And I've seen scores drop from 20 to 60 points with one
or longer. Yeah.
One
Higher.
little collection.
I've seen them go 75 or 100 points with one minor collection.
Okay, so let's talk about that, because generally excellent credit is 740 or better. Okay. So if one was to lose 100 points on one of these collections, they go down to 640. Explain that gamut and how that would affect interest rates and qualifying for a mortgage.
Well, on a conventional mortgage, interest rates are based on certain pricing adjustment factors. And we have buckets based to grade a borrower on that come from Fannie Mae and Freddie Mac, and credit score is a big part of those buckets.
And how do these buckets work? Are they point buckets?
Yes.
Okay.
Yep. There's different point
work?
buckets. So, for instance, 700 to 719 is a bucket. 720 to 739. 740 and above is a bucket, and then they go all the way down to the low 600. So you've got 19 point swing. Every 19 points that you lose or gain is going to impact your interest rate. The bigger the swing, the bigger the impact on rate.
So for an example, if I was a 740 score, I may be getting tier A pricing, let's call it.
Correct, yeah.
Okay, and I may get X rate, but if I've got a 700 score, I may get tier B pricing, or I have to pay extra in what's called discount points or higher cost to obtain that better rate.
And when we have, for instance, a joint borrower situation, husband and wife, married couple, whatever the situation is, two co-borrowers on a loan, we are going to look at the mid score of the lowest borrower. So, for instance, if one borrower has 800 credit score and the other borrower had a medical collection that took them down to 680, we're going to have to price the loan off the lower of the two borrowers, even if it's an error. So this gives consumers significant gains, and we're just starting to see this in the credit reports that we're pulling. It's going to take and this is going to the impact of this is going to continue to increase as the months go on. So, for instance, right now, any consumer that had paid medical collections with a zero balance on their report, they will automatically drop off within 30 to 45 days. If you have unpaid medical collections, nothing will change unless you pay them. So my recommendation to consumers is pull a free copy of your credit report, analyze it, and if you have medical collections out there, I would go so far as to say, you know what, get rid of them. If it's $50, principal, whatever, just pay it, get rid of it, and then within 30 to 45 days after the balance is resolved to zero, then the collections will be completely erased on your credit report, which then you will see the credit score uptick.
So that $50 collection that they don't want to pay due to principal could cost them tens of thousands of dollars in interest over a 30-year period on a mortgage because they're getting tier B or tier C pricing.
Yeah, the other thing that I think that's important with medical collections, and this is, I'm going to share a real life story from this week. I've been working with a young man to get him approved for his first house. He's got a good job. He's got decent credit, but he doesn't have a lot of credit. So in our world, we call that a thin credit situation. At the time that I talked to him, he had a car loan and nothing else. Well, one trade line is not going to give you enough depth.
And what is a trade line, Danielle, for our consumers?
One account.
One account,
okay.
Reporting
on the bureaus.
Okay.
Yep. So he only had one car payment. So I said, look, we need to get some more history here. What he did is he opened a credit card at his local credit union where he banks. So it's a safe situation. He can use it gently, pay it off right away, just to help him establish credit. Well, he had 2 medical collections on his report. So with this recent change, and they were small balances, they honestly would not have impacted him getting a mortgage, but between the two of them, they were under $500. So I told the young man, I said, I want you to call the collection company, and I want you to pay these debts off. If they belong to you, pay them off so that we can then rescore or re-pull your credit in the near future. Because he doesn't have a lot of credit, those 2 medical collections were fairly detrimental, in my guess, by at least 50 points. Okay, because he just doesn't have a lot of credit, it's not going to offset it. Okay.
So in that case there, even though you could qualify him for a mortgage, he was going to pay higher in interest rates and cost, and
Correct.
so you're going to counsel him on how to improve this.
We want to get him in the best position possible. Well, here's the big surprise. He called me back the very next day and said, Danielle, they're not my debts. It was someone with the same last name, different first name, but it was still reporting on his report.
Okay.
It was not tied to a social security number or anything.
Okay.
So I guess pro tip around potentially erroneous information for anybody on their credit report. This could happen to anybody. You need to investigate things quickly when something pops up on your report. This young man he must have been to an emergency room in the past 5 years. So he thought, oh, maybe this was from my emergency room visit. He didn't even know. And turns out it wasn't his. As soon as he called the collection company and they verified his information, they apologized and said, we're sorry, this isn't yours, we're taking it off. So we will be able to get a letter confirming that he had those weren't his debts. I'll be able to rescore his credit or pull it in the very near future when he's ready to buy, and we should see a significant change in his credit. So he goes from looking like, C quality borrower, he'll be probably a B+ to an A- in a very short period of time.
So that could make him go from maybe a government loan, because a lot of times with people less than 680, maybe a government loan is a better option. This could move him into the conventional arena,
possibly
to get a loan, but also put him in a potentially more competitive offer market, with the conventional loans.
And I really felt, his response to the collection company was so swift. And immediately I thought, you know what? They know they're wrong, and the federal rules have changed. And my guess is there could be penalties for non-compliance of this new federal regulation. So I think people need to start calling these collection companies, because I think we're going to get a different feedback.
Yeah.
Then
they're going to be a little more proactive.
Yes, I think so. I mean, because who would have thought that?
Because they're watching.
Yes, yeah, because they will be fined, I believe, if they report improperly. So they do need to clean up their acts. You know,
one of the powerful tools we have at our office is when we bring in clients and we actually pull their real credit. We see collections on there. We actually have the credit simulator. So we can actually go into the credit simulator and simulate that collection being wiped off their credit report or paid off in full on other type collections to see this is where we can get with your credit score.
Right.
If these medical bills are paid off in full, they will come off your credit, and your credit will go from X to Y, and this is what we can now qualify for. Here's current rates, and it just kind of gives our clients, a game plan, a playbook on where they can go. Because I tell you what, education is everything.
Yes.
And we have so many clients that come in and they really don't have a lot of credit. They're thin credit because they were told, hey, you don't need credit, pay cash, all that. And that's all changing. Credit to me is almost as important as your health. Remember, your health is your biggest asset. No, it's your credit, because if you don't have credit, you can't even pay for your health.
Right.
The way I look at it.
Absolutely. And the other big tip that to tell consumers is, let's say you do have a medical bill. You know, right now, with all of the health insurance changes we've had in the last 10 or 12 years, our copays are very high and our coinsurance amounts are ridiculously high. You know, most families' coverage that I personally have experienced is that my coinsurance amounts are between $8,000 and $12,000 for my family.
Yeah.
So if you have one family member that goes into the hospital, you know, for instance, you are going to then get hit with probably a $10,000 bill. Most consumers cannot pay that instantly. So what you need to do immediately when you get the bill is call the medical provider, hospital, doctor, whatever it is, and set up a payment plan.
Yep, be proactive.
Be proactive. Don't just throw it in a drawer and go, shoot, I can't afford that, you know, push it to the side. If you call your medical provider, they will set you up on an interest-free payment plan. They will not report it as a negative collection, and they will allow you to pay the bill off. You know, my daughter had an emergency surgery about 15 years ago, and I think it took me 4 years to pay off the copay because it was such a large amount. But it was never a collection. I paid it on time every month, budgeted for it, and boy, was I glad it was over. But, you know, my daughter's health was much better, and, you know, it was an unfortunate emergency that we had to deal with as parents.
You know, so even though you were able to finance that over several years, however, they won't report that on your credit as a timely payment. They will only report it when you don't pay.
Correct.
Just like our mobile phone carriers and utilities.
Yeah.
You know, they don't report you're paying good, but boy, they will be right there when you're not paying.
Correct.
You know?
Correct. So be proactive. If you have something unexpected, you know, most medical providers are going to work with you as a consumer because they want the money, and B, they'd rather take a payment from you than have it go to collection and not pay it at all.
Yeah. So for our consumers, you know, and everybody is entitled to one free credit report. You can go to freeannualcreditreport.com. Annualcreditreport.com. Obtain a free one.
And but you can get the free report from each of the three bureaus. So you could pull, for instance, TransUnion, 6 months later, pull Equifax. And it's important to sometimes look at the different bureaus because with medical collections, it is very common that they only report to 2 bureaus. It is the creditor's discretion on who they report to. Now, typical mortgages and car payments from big banks are going to report to all 3, but it is frequent with medical collections, for whatever reason, they only report to 2. That is one reason why we know how bad it impacts your credit scores. Because I've seen people that have a 740 score, had a recent small medical collection, and the other 2 scores are, for instance, 650 or below.
Yep.
So we know that if that medical collection wasn't there, even without our credit analyzer tools, we can see very clearly the damage to the 2 bureaus due to the medical collection.
So if a consumer is to go get a free annual credit report from the bureaus, and they do have medical collections on there. If you are thinking about buying a home or refinancing a home, that's when you could then meet up with us, have an appointment. We can actually do a loan application, pull your credit, run the credit analyzers so we can see what has to be done so we can optimize your credit scores to get you the best transaction that you can do under your current situation.
Exactly.
And also with the simulators, we can actually see where your scores will be in 30 days, 90 days, 10 months, up to 2 years. We can project out where your scores will go as stuff falls off and if you continue to pay your bills, which to me is a very powerful tool.
It is. Yeah, and that's usually pretty accurate.
Yeah, within a couple points.
So what's interesting to note, though, about the credit collection changes with medical is that 2 of the factors of this change were in effect July 1st, 2022. The 3rd is not in effect until March 30th, 2023.
And what's that 3rd one, Danielle?
Currently, the rule is do not report medical debt collection accounts under a predefined minimum threshold. And it will be at least 500 and published later this year. So that's the action that is going to change next year.
So in March 30th of 2023, if it is $500 or under $500, they will not report it at all on the credit report.
Correct.
So until then, they can.
But it does state it will be at least 500 and published later this year.
Okay.
So that's a stay tuned moment.
Oh, yeah. Well, hey, we're thinking 500, might be 700. We don't know.
Right.
Stay tuned.
Well, it won't be lower than that,
Yeah.
which is really good because
Yeah.
that probably takes out the majority of medical collections.
Yeah, because with inflation, even the medical collections are going up.
Probably. I hate to say it.
Yeah, unbelievable. So as we wrap up the show, what is some of the best advice you can give to our consumers about their credit and they want to get credit ready or just in credit in
check
general?
your credit annually. And if you need help reading a report, don't understand something, don't hesitate to give us a call. I know that we will do that. Even if we don't pull somebody's credit, I'm happy to review the free consumer credit report with somebody and help educate them on how to use their credit, what to take care of. If you have some serious credit issues in your past that you need help getting cleaned up, there are reputable credit repair companies that we can refer you to that will help you get the work done. So, and if you're somebody that has struggled with medical collection issues, whether you do it yourself or you hire a company to help you affordably do it, now is the time to take action so that you are in a better position. And, we've talked about before that credit scores are not only important with your ability to borrow money, it's also super important with your insurance rates, being able to rent. All of those things come into play.
Your credit report is your financial resume.
Yes.
Think of you as an employer.
Yeah.
And you're looking at someone's financial resume. And if there's a lot of collections, very low scores, what are you going to think of hiring that employee?
Even landlords are going to scrutinize that, even if you're a renter. And that's a problem right now because rental rates are going up. And because of the shortage of housing nationwide, either for purchase or rental, if you've got lousy credit scores, a landlord will probably pass and take the next guy who does a better job of paying his bills.
Yeah, that's almost like, because landlords, they're getting multiple offers on their rentals.
Yes.
And so they're looking at the offer.
Yep.
And if they're looking at your credit scores, that's your resume. You want to look stellar.
Exactly.
And remember, there are bad things that happen to good people. Everybody. I've had plenty of down spots in my life there, but I was able to come through, and I've learned how to really, manage them. And we'd love to help anybody who doesn't understand how to build the best financial resume.
Exactly.
I guess if you say.
Exactly.
So, any closing words, Danielle?
No, I think we covered it.
Well,
today.
if you got any questions on credit, go to DanielleBoote.com or VictorBals.com. And for Danielle Boote and myself, this is a wrap on this episode. We'll see you next time on A Smarter Way Home.